All right. Thank you, everybody, for tuning in. Obviously, should be a pretty interesting week with the election, which comes only every 4 years. So, I mean, I don't know what's going to happen. I don't think anyone does. There seems to be so many contradictory or conflicting signals out there that it's like, who the hell knows, you know? All these experts are always wrong. It's like, but yet there is still experts. Well, anyway, whatever. Let me know you want to get back to football or whatever. I'm going to go back to watching the Patriots lose because they suck, but I'm sure you don't feel sorry for me. All right, anyway, we're going to talk about the SPY, right? The S&P 500. One of the things that I used to do a lot in my institutional trading days when I was running meetings and so forth, research meetings for the firms, because that's what one of the traders' main roles, because the traders are the people that know what's going on in the market. Portfolio managers, analysts, they have different roles. Anyway, so what we would do is look at the different industries because sometimes different industries are in the driver's seat. Sometimes they are, sometimes they aren't. In other words, sometimes the most important thing to watch is, say, healthcare. Sometimes it's tech, sometimes it's industrials, so forth and so on. It changes. And then within the sectors, you can even kind of go down another layer and figure out or think about like what's the most important industry within the sector. But anyway, let's just go through. There's 11 sectors. Now, let me just say right up front here, these little guys, utilities, real estate, materials, we're going to look at them, but they really don't influence the broader market because they're so small. Energy is only 3.4% of the market, but energy can affect other things. Consumer staples is only 5.8%, but sometimes money flows into staples before the broader markets go lower. It's like your classic flight to safety thing. But we look at all the sectors for trading ideas. All right, so first up, obviously, we're going to look at SPY. And, like for people out there that think technical analysis is a myth, well, you know what? For most people, it is because they don't know what the hell they're doing. I do because I understand that it's just a study of supply and demand, right? And psychology. For example, here's the S&P. Why did the S&P find support right around here? Is it just some random coincidence? No, it's because it was resistance here and resistance here. Now, let's think about this. There are people who sold and they thought they did a good thing when the price went lower. But eventually, when it broke higher, a lot of the people who sold are like, I'm a jackass. I made a mistake. I got to go complain to my, I was going to say wife, but that might not be politically correct. My significant other, actually, it's my wife. I sold and now those prices are. If it gets back to the price I sold at, I'm going to buy my shares back. So remorseful sellers from here, placing buy orders here, turns resistance into support. This is not a myth. This is a graphical illustration of supply and demand. Now, we looked at the sectors. The biggest sector is the technology sector. And we're going to look at the ETF that tracks the technology sector. And what do we got going on here? All right, here's another example here. See resistance here became support over here. It's not a myth. I'm looking for if we head a little bit lower, and I think we're going to. I mean, I don't know what's going to happen in the election. I mean, I know what I hope happens in the election. I mean, I guess, I'm just a guy who's anti war and anti inflation. But there's a good chance that there's going to be some support here. Now, another thing in markets is there tends to be support at levels that had been support before. And you get a really good example of that here with XLK. Think about this. This is a sector that's worth trillions and trillions and trillions of dollars. And yet somehow what happens? It finds support within dollars or, like you can't explain this from a fundamental point of view. But if you understand technical analysis and you understand it's a graphical illustration of supply and demand, and investor perceptions and emotions, it's easy to understand why you would get supporter. I mean, we go into this massive sell-off. I don't even remember what caused it now. This is like in July. And where do we find support? Like within points, right? This is if technical analysis is understood, and most people that do it suck. So I understand why it's so dubious. And then you get like these people that are into this like stupid stuff like Gann theory and Elliott wave. I mean, that's, that stuff kind of offends me because it degrades, I think, what we do. But anyway, just like we saw support before, people sell and they're like, oh, I made a mistake when the price goes higher. If it gets back to my sell price, I'm going to buy my shares back. Remorseful sellers selling at a bottom could put support in here again. If we go down a couple more points, there's a good chance there's going to be support and we get some kind of a bounce, which I think we're kind of due, right? I mean, markets don't go straight down. All right, let's go look at our healthcare sector. And this is another, I mean, people have been talking to me about this. Like, oh, Mark, yeah, you're so smart, blah, blah, blah. No, I'm not. I just am competent and I know what to look at. That's the difference between me and other people. I mean, I don't know. If I was that smart, I would figure out how to friggin', keep my kids in. All right, Mark, you're going off on a tangent now. Shut up. All right, what do we see here? Healthcare sector support, former support level. Now we talked about when this support broke. So this is another idea I know a bunch of you have made money on, and I appreciate your accolades. But just remember, pride comes before the fall. So, but we get to support. We find support at a level that was support before, right? Why did we know that there was going to be a decent move down? And I know some of you guys got into some of those inverse ETFs because when you break support, what does it tell us? Well, support is this large concentration of buyers, investors, traders, whatever, that have this concentration of buy orders around a certain price level. If we get below that, or in trader parlance, if that's even a word, we say the support broke. But it's not just a psychological thing, or I mean, a symbolical thing. It is psychological or supply and demand. It tells us that the buyers, the people who created the support with their buy orders, are out of the way. Maybe they finished their orders, maybe they cancel their orders. But when you take all this demand or buy orders or demand out of the market, guess what? When the sellers come in, they have a hard time finding buyers and they have to push the price down. They have to sell at a discount to get buyers interested. We get down to the level that was support and wham, what happens? Support again, because there's people that sold back here who are buying here, and finally the sellers can find support. And then a lot of times we rally off of support, and that's because some of the people that want to buy start to worry that they're going to get outbid. They know that the sellers are going to go whoever's willing to pay the highest price. So someone else might be like, oh, I'm going to bid a little bit higher. I'm going to bid 147. Someone else might be like, that guy's bidding 147. No, come to me. I'll pay you 147.20. Someone else sees it and is like, oh, I'll pay you 127.30. So forth. I mean, whatever. 147.30. So forth and so on. Supply and demand. Now, why is there support here? Well, seller's remorse. People sold here, the price goes higher, blah, 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 gets back to the price. Remorseful sellers from here, placing buy orders over here, can make resistance become support. So anyway, let me kind of just go through the markets here more. So we looked at tech. Here's healthcare, found support. Probably going to be a little bit neutral. We'll look at the financial sector. Yeah, financial is kind of going sideways. Industrials, kind of consolidating. Not too much going on over there. Communication services looks a little overbought. Probably will be a little bit of a downside there. I don't know if there's enough to trade, and if this is kind of what's been. I talked about different sectors are in the driver's seat at different times. It's been it was for a while. It was like consumer discretionary, right? And just like you can look at sectors to get an idea of what's going on in the broader market, sometimes you can look at the stocks that are within the sectors to get an idea of what's going on in the sector. Now, if we look at and yes, I know this is another idea that you guys have made a lot of money on over the last week or two. Um, anyway, I'll show you why, right? So there's two stocks in this sector that are make up, more than a third of it, right? Amazon and Tesla. Tesla's 15%. This Tesla was one of the easiest trades I think I've ever recommended in the, decades where whatever I've been doing this. I mean, right? Look at that. So Tesla, this is just, yeah, I know. Yeah. All right, so someone's saying to me, it's just like the mobile trade, and that's actually that's an excellent point. So we also made some money in mobile on the short side, or ExxonMobil on the short side, right? Who the hell cares what stock it is? Who the hell cares if it's ExxonMobil or whatever, or Bitcoin? Now we're probably going to see, and we'll look at that. Let me write it down. Um, we get to resistance, hit resistance, sell off. Get to resistance, hit resistance, and sell off. Get to resistance, hit resistance, and sell off. Why? Well, guess what? Because people who bought at the resistance level regret doing so when the price goes down. When it finally gets back there, remorseful buyers from here, placing sellers from here. This large concentration of sellers creates resistance again. Now you can see it. You don't need to be a former hedge fund trader or market maker, which I was, by the way. No, just kidding. I think it's so funny to hear all this like former hedge fund trader. Well, there's a lot of former hedge fund traders. There's a lot of traders, hedge fund traders are former traders because they suck. They're a former for a reason. Not to me, by the way. Anyway, so yeah, you get to resistance. You tend to hit resistance at former resistance levels. The sellers start to undercut each other. You get a snowball effect. The sellers know the buyers are going to go to whoever is willing to sell at the lowest price. And this was such an obvious call. Tesla gapped up, was really overbought, you know, selling off. Short term, short term, I mean, I'm going to be closing out. I would say around 245. I'm going to give myself a little bit of room. I'm going to say 246. Now, but then, it's not like it's over. You don't take it off your radar screen. If this support breaks, there's a good chance we fall right through this gap here. Remember, you gap down, spend some time trading, you get back up. The reason why you get support and resistance is because you get a vested interest of like people who are buying and selling within a certain range. If you gap through price levels, meaning you don't trade at them, well, there's no one who bought and sold. So if this support breaks and we fall back into this gap, there may be less people than usual looking to buy if we were in a situation that the stock slowly trended through there. All right. So anyway, before I go, I just want to show you all oil. This is another thing I know people have made some money on. Another like really kind of obvious trade. This is like the inverse of Tesla, right? I mean, it's like we get to support and we find support at a level that was support before and we rally. It's the exact opposite. Resistance comes from buyer's remorse. Support comes from seller's remorse. People sell and the price goes higher and finally gets back to their price. They go to buy their, in this case, oil back. Things rally off of support because you get aggressive bidders, or I should say concerned buyers outbidding each other that force the price up. And then before I get going, everyone, I just want to take a quick look at interest rates. I mean, interest rates are soaring. Has to be kind of bearish for the market. All right, let's do a quick look here. I don't think we're going to see anything that really stands out. Oh, actually, I take that back. Look at this. We could look for a potential bounce in the utility market here. Ooh, gonna write that one down. XLU. Right? Support at a former support level. There's a chance the buyers start to outbid each other. And we can trade it here, of course, but we can also go look in the sector, see what stocks are within the sector. Now, I know because this is my job and this is what I do, what the stocks are, but I went on to just show you NextEra Energy, that's NIE, Southern Company, Duke. These sectors, they don't get the attention that like obviously AI does and tech and all that, but sometimes you can come up with really cool ideas in these sectors that are not, they're like not what we call crowded. They're not on most people's radar screens. Right here, I mean, here's an idea right here off the bat, right? We saw resistance became support. We know things tend to bounce off of support. The stock for it is very oversold. That's going to draw buyers into the market. So right here, here's a trading idea. All right. It's not a recommendation. So you can't like sue me or whatever. I mean, yeah, you could anyway, because I'm protected by the First Amendment. But yeah, so resistance became support. We know resistance tends to become support. We know there tends to be support at levels that were support before. So next error gets down another dollar or so, around 76.30, 76.35. I'm going to watch it for a rebound. If it gets back up above 77, right? So let me just elaborate here, right? Because I usually don't give recommendations, and it's not a recommendation, it's an idea. Right? I don't want to get sued. Um, anyway, this thing drops about another dollar to around 76.30 or so. It's going to be at a level that having resistance and support, but that's not enough to buy it. I would wait for the rebound, and if it gets back above 77, then I think you got an idea there for a buy. All right. My target would be up around 79 and 80. And if you want to know why, let me know. And we'll talk about it tomorrow. All right. Thanks, everybody. I appreciate it. And you have a good night.